on Bloomberg. Okay, thanks for tuning into the trade setup right here on BloombergQuint Live, everybody. I'm Neeraj Shah, and it's a truncated week. I won't get too much into talking about what the week has in terms of events, etc., because frankly, all of these events could change, right? If indeed there are these, there's so much loose talk about lockdowns happening. I heard of so many people selling out big chunks of quality stocks on Friday because there was fear or talk in the town that there'll be a lockdown starting Monday. I mean, who knows? It could happen, but see, they've been proven wrong because the markets are going to start off positively today. So I would probably say take it a day at a time. Let's first look at the global picture. The US did okay. Asia hitherto has underperformed, right? If you just look at the EM or the Asian peers, they are lagging the developed market peers by a margin. So you have to keep in mind that compared to the global markets, compared to the Western markets and the developed markets, the Asia Pacific stocks have underperformed. So that's part one of the equation. Having said that, this morning, Asia probably doesn't have as bad a painting to itself. So you're seeing most of the markets have some positivity to themselves. There could be a market here or there which could be flattish in nature. Otherwise, you are largely seeing some green on the screen. In fact, if you look at the SGX Nifty as well, there is some bit of an uptake, about 100, 120 odd points, 130 points now. So there's some bit of an uptick that is in store for us in the session today. So that's actually a good sign. Now, can this continue? That is the $1 million question. So with the presumption that this is how we start off, and we start off around the 15,000 range, there's this wonderful weekend story that Dr. C.K. Narayan, an eminent chartist, writes on BloombergQuint.com every weekend. And I'll borrow one piece of the story. I obviously can't give out the whole story, but I'll borrow one piece of that story today to just tell you what he's trying to say. And frankly, that chart would very, very well suggest how, if we start off at these levels and at around 15,000, then we are technically, I just need to scroll down a little bit. Yeah, this is the chart. Now, if you look at this chart very carefully, and the top half of the chart, it will show you how there's this channel which the Nifty tends to hit and come off. We are kind of finding some bit of resistance around this 15,000 level mark. A few experts suggest that if you are indeed a momentum trader, you might want the index to cross 15,100 decisively and then take a long trade. Otherwise, there might not be merit here. So keep all of this in mind. I'm not an expert on the index. I don't think anybody is to that matter. But well, Dr. C.K. Narayan has years of experience of trying to predict the index in a much better fashion. So I thought it's best to bring his view at this critical juncture when people are a bit undecided. The two pockets which I think we need to keep in mind are these, right? Commodity stocks could continue the merry run. I think commodities have really shot up, and I'll come to copper in a bit, but iron ore this morning has shot up about 10%. So commodity stocks could continue the merry run, but autos may remain under pressure. Remember, over the weekend we heard news of Maruti, Hero Motocorp extending their lockdowns. Now you may argue that they'll not have pressure because their current facilities or the current inventory will meet the demand. But the point being, if a company is saying that we are extending our lockdowns for a month, that's a month of production loss, which means that the earlier build recovery will not be as strong, and you have to pay cognizance to that. They have corrected a bit, Maruti, for example, but I still think that there could be weakness, or they may not really gain too much, even if the index were to gain. Now, let's wait and watch, really. I know the market looks 6 months out, but I think this is a bit of a surprise, this 1 month all lockdown, and therefore I think the markets could react negatively. So that is part one. And watch out for the oil marketing companies. They have been doing well in the last 2 or 3 sessions, even though you may feel that because of the lockdowns, the oil demand may actually go down. But I think in part due to the fact that the lockdown is not as severe, and in part due to the fact that the divestment drive is coming closer with every passing day, there's some traction out there in the BPCLs, HPCLs, IOCs of the world. So do watch out. That could well be the sector of the day. FIIs sold about 1,042 crores, DIIs bought, but this was largely on account, I think, of the SBI Life bulk deal, and you have to bear that in mind. In fact, that becomes the first stock to watch as well that I want to bring out, and I'm kind of done it that way simply because of the FI and DI numbers. Now, it happened because of this bulk deal that there was a selling done by a FII, and funds like Mire, SBI, Sundaram Axis, HDFC, all have bought SBI Life shares in a block deal on Friday. So watch out for that. That there's some marquee investors who've gotten in, the supply overhang has gone away now, and the insurance data that came out doesn't look too negative. Now there are different ways to look at insurance, right? Some brokers will look at annualized premium equivalent, which is probably a good way to do it. Motilal Oswal has looked at individual WRP as a metric, and on the individual WRP basis, on a YOY basis in April 2021, this has grown about 263% versus a dip of 73% in April. Now, obviously, you shouldn't look at a YOY basis, but this is what Motilal has done, and that's why I'm bringing it out. I think on a 2-year CAGR basis, it's flattish, but still, it seems to have done reasonably okay, SBI Life. Let's wait and watch. On the individual APE basis, it's actually HDFC Life and Max which have done well. SBI Life and ICICI have been flattish. So let's wait and watch. But the supply overhang having gone, this could be positive news for SBI Life. Remember, the results were very strong. So let's wait and watch how SBI Life reacts today. Other one is Bandhan, and it's interesting to kind of ponder over what could Bandhan do today. Right now, here's why. So net profit at 103 crores. The estimate, Bloomberg estimate, was 497 crores. The NII at 1757. The Bloomberg estimate was 2,094 crores. The earnings were dragged by higher interest reversal as well as elevated provisions, and of course the PCR declined sharply to 50%. But keep in mind, the higher interest reversal, like I said, earnings were dragged down, was about 538 crores, and the elevated provisions increased to about 1590 crores, which is a 93% YOY increase. And keep in mind, for Bandhan, the net interest margins as well declined very, very sharply. I think about 150 basis points decline in net interest margins too. So all the factors for Bandhan were pretty negative. The key is, when I looked at all the brokerages, almost all the brokerages, none of the brokerages have downgraded the stock. That's the beauty about this thing. That the numbers were so bad, but I haven't seen downgrades on the stock. So it could well have a flash reaction downwards, but the street is probably short on Bandhan, and if it doesn't open downwards, then it could well see a bit of short covering as well, because the market is positive today. Keep that in mind. The simple strategy, I think, and I may be completely wrong here, so please frame your own strategy, but it will be foolhardy to go out and short Bandhan today on the back of these numbers, simply because it might open a gap down, and almost every brokerage on the house, on the street, has said that you can add Bandhan Bank. So keep that at the back of your mind. UltraTech is the third one. The numbers beat Bloomberg estimates. Revenues are up 17% at 1445 crores. The Bloomberg estimate was 13460 crores. Net profit at 1775. The Bloomberg estimate was 1645. EBITDA at 3690. Their estimate was about 3152. So extremely strong EBITDA performance. And they've reduced the net debt to EBITDA ratio to 0.55 times from 1.72 times. Can you imagine the quantum of debt reduction that UltraTech has done? And therefore, on a YOY basis, the interest cost savings that UltraTech's earnings will have for each of the next few quarters is quite stunning. Of course, Q1 will not be as strong. I repeat, for all companies, Q1 will not be as strong, and you have to be careful about the bull case scenario. UltraTech valuations are also premium now, but the performance was rock solid. The one name around which I can never figure out what good results can do is Avenue Supermarts, right? Just exorbitant valuations, but it keeps on doing this. Right, compared to estimates, the revenues, the margins, the net profit, all of them really strong. But it's just so expensive a stock that you don't know whether the street will suddenly turn more bullish on Avenue Supermarts because of just superior execution. I mean, it's just difficult to say that there will be a PE re-rating even further, because I mean, it's been re-rated to probably the maximum level that anybody can think of. Now, you got to keep in mind that if indeed the micro lockdowns will hurt Avenue Supermarts, could it be bad? But we've seen it get hurt as much, and therefore maybe Avenue Supermarts will still do okay. Let's wait and watch. What I do think will get hurt will be Kansai Nerolac. The numbers were not great. So Q4 revenues were down 8%. EBITDA margins cracked from 19.1 to 14.62%, and net profit was down about 39% at 124 crores versus 204 crores. And frankly, viewers, while this quarter was bad on a quarter-on-quarter basis, If you look and think of Q1, higher commodity cost and lower demand will hurt all paint companies, including Kansai. So not the best of quarters, and probably Q1 will not be as strong. I don't know about the sell list, but Kansai should probably not be on your buy list. So keep that in the back of your mind. Decent results from the textile companies, so Sutlej Textiles and Nitin Spinners. GE Shipping, the numbers, by the way, were probably not the best, but they were better than estimates, and maybe the damage is in the price, even though I think the stock rallied a bit in Friday's session. But I think the valuations are not too bad. Baltic Dry rates are high, and the numbers are slightly better than what the street was factoring in, and which is why I'm saying it's good results. Otherwise, optically, the results were bad. But for the textile companies, Sutlej as well as Nitin Spinners, the results were very good. So keep that in mind. And InterGlobe Aviation is interesting. They've come out with a statement. The board has decided the company should continue to explore all options to increase its liquidity, including by way of QIP. Is there a QIP coming in InterGlobe Aviation? And could it happen at a higher price in these difficult times? That's the key question. So let's wait and watch. But they are contemplating. I mean, it's not necessarily come tomorrow. It will come. It could take about a month, whatever it is. But keep InterGlobe Aviation in the back of your mind for this reason. Last but not the least, why I was saying the trade setup that commodities could continue their merry run. I spoke about iron ore doing well. Copper is the other one. And there's this story on Bloomberg.com and BloombergQuint.com, which speaks about how copper is just smashed past on the record. It's now at about 10,350 odd dollars, and which is the highest in probably 9-10 years. And there are people saying that copper could actually go to 15,000. Goldman Sachs or somebody said it could go to 20,000. Typically, when such predictions come in, the reverse tends to happen at times. But it's a wonderful, wonderful story. You might want to read this if you are indeed thinking of how to approach base commodities. We all looked at what happened in steel. Could it be the turn of the base metals, copper, aluminum, zinc, what have you? So this is a wonderful, wonderful read, really. And forget this. I'm just saying read anything on copper, because copper is really shooting through the roof. And like I said, iron ore today as well, early contracts have really shot up. So base commodity stocks could well be in focus. Steel anyways has seen significant long build up in Friday's session too. And the stocks have done well. Not that base metals haven't. Hindustan Copper was up 10%. And the numbers are, and the valuations are really stretched. But if the commodity keeps on doing well, the supply shortage, you never know, this could do well. Look at this. Thank you to my producer. Iron ore prices have just gone through the roof. So just watch out for the base metals. They're really, really shooting through the roof. So this is the insight that we wanted to leave you with. Stay safe. Please stay masked up. Get vaccinated if you can, and if you get the chance on the COVID terminal or COVID app. But thanks so much for tuning in today. Have a great week ahead, viewers.